more intuitive. So, forgive me if I stop, but I'm not sure. We'll have to handle this somehow because people are joining in at different times, and so I have to manage this waiting room at the same time. But this class is a little bit more intuitive, right? So you have to be ready, almost like an economics class or math class or something. Math in terms of when you're dealing with problems, not math. You don't need to know calculus or anything like that here. But you kind of have to be able to be flexible and be able to approach problems in different ways. So you will see when I explain problems in, let's say, my narrated lectures, you will see that I explain them sometimes in different ways. And then I say, well, you can even find your own way. You might say, well, what are you talking about? Find my own way. Well, what I mean is just look at the problem, look at the way I'm doing it. And then maybe you find, oh, you know what? I understand this, but I understand it in this way, going through this direction. Well, that's perfectly fine as long as you're getting correct answer consistently, meaning you didn't misunderstand something. That's totally okay. That will work. So managerial accounting also should be, I hope, and should be a little bit more, I guess, interesting to you being non-accounting majors, right? So none of you are accounting majors here, and I talk about this a little bit in my how to do well in this class and syllabus. So you might be a finance major, HR major, management major, a CIS major, marketing major, whatever. But you should be able to gain some, again, other than like in financial accounting, you have to learn because you're supposed to be future managers, right? You're getting your college degrees, you want to run things, and hopefully you will. So you have to learn a little bit about, well, what's the income statement? What's the income statement? What's the statement of cash flows? What's the balance sheet, right? What are the assets? What does that mean? When somebody tells you assets, what does this mean? Inventory, what does it mean? Depreciation, what is it? That was kind of what the financial accounting was about, especially in the basic level. Of course, accounting, people then learn much more in this, in much more detail, much more depth. But you will find that financial introductory class in financial accounting. Now, this managerial accounting class, again, is a little bit different because here you learn more, I would say more about operations. Okay, so if you want to have a fancy name for this class also, or this will make it more exciting to you, or make you a little bit more enthusiastic about the topic, you can call it operational finance, for example, right? Or some kind of strategic accounting, strategic finance, or something like that. Because you will have to learn some concepts here. Again, we will not go into a lot of depth here because, again, you're not accountants. But the concepts that we will learn here will be same for people who will be professional accountants. So when you start thinking about these concepts, you will realize that you're thinking actually about the nature of your business. Right? So when we say managerial accounting, that's because managers need to know this. But we also call it cost accounting because you need to know how much things cost you, right? And that's directly related to your business. So what am I doing here? What kind of product am I producing? What kind of service am I producing? This kind of just introduction about the class, so you know what you're doing. So again, if you're an HR manager, how much does it cost you to bring a person on board to hire somebody? Because they might leave in 2 months, they might leave in 6 months, they might leave in 3 weeks, right? So you have to think about those things. If you're a finance person, is a little bit more difficult because managerial accounting or cost accounting was developed originally for manufacturing, and we will talk a lot about manufacturing here. Manufacturing, not manufacturing, is making things better in terms of this class, in terms of cost objects. So in finance, I mean, it's kind of, how much does it cost me a specific service to provide? But then what is your product, right? Your product is service, for example. So who are you providing this service to? Well, to the customer. So maybe the customer is your cost, right? Of course, customer is your revenue also, but customer costs you something. Same in a law office or in a restaurant, right? Well, in a restaurant, a meal might be your cost, but you're looking really at the customer, right? So how much customer will spend, how much customer will cost. So this is also related to what somebody asked already, I think, about the homework. Are things changing or they're not changing? We'll get to this in a second. Period cost, product cost, variable cost, fixed cost, etc. So the class should really be interesting to all of you, at least for that reason. So you might get some idea, well, to look at the world around you a little bit differently. So you say, well, because a lot of this you already know. But you know now, for example, in this pandemic, if the restaurant has to pay the rent anyway, but they cannot have customers, I mean, that's a problem, right? It's a big problem. Or they can have customers, but they can only have a limited number of customers. But their costs, which costs, like rent, like having a chef, etc., are fixed, right? They're not changing. So that's a problem. So you might start thinking about this. You might be asking yourself, well, look at this store here. I mean, they're selling these cookies here for $1. I mean, but this rent here, how can they pay this rent with just selling this cookie? How many cookies do they have to sell? Things like this. So, so I hope the class will be a little bit interesting, not just something to get through. Okay, you will go through this also in our narrated lectures. Okay, so what is the cost object? The cost object is anything that we want to know cost for, right? We just said we might want to know the cost of making shoes or computers or cars or whatever. Then we will focus on cost a lot here because you start with those things. I mean, even when you're making business plan, I'm sure a lot of you already have done some business plans, like for marketing class maybe, or for a basic business class or management class, something like that. You have to make a business plan. So you say, well, we will sell this many. Well, everybody likes to talk about sales because we are making money, right? We're selling stuff, we are making money. We are happy. Well, but we have to make those things first, or produce the service first, or something. So and then get paid. So we need to know how much our costs are, and our costs are related to our cost object. Our cost object, again, shoes, computers, cars, whatever. In hotels, hospitality industry, in restaurants, we are producing service. But some are kind of combination, service with a product. Like in a restaurant, you have a product, you have a meal, but it's kind of a service, right? It's not just pure manufacturing that you're making something. A customer might be your cost object. How much well, in the legal industry, you're producing service, but what is your cost object? It's really a service to the customer. So how much will this customer cost? If you're paying your lawyers per hour, $100 per hour, well, how many, how much then you have to charge the customer? How many hours will this customer take? How much paper will it take for this customer to spend it? And then we can have a large, big cost object like what we will call here job, like something big, like a building or a movie. So the whole movie would be one product, but it's a big product, big thing, right? So we'll call it maybe a job. It's not a big deal. You don't need to get stuck with any of this kind of terminology. Remember these terms, memorize them or similar. You need to understand it, right? So when we start looking at problems, you need to understand, but understanding it really will be related again to this kind of wheels that we will go over now in this chapter 1, and then apply them instead of just kind of memorizing. We will see in a second. What is direct cost, indirect cost? You don't need to know the definition. You need to understand, well, how do I recognize direct cost? How do I recognize indirect cost, right? We can even look at the whole store as a cost logic. Okay, so we have 10 stores in our corporation. We are running 10 stores. Well, different stores might be different. So one store is in Manhattan, rent is very high, and then another store is somewhere else out of New York City, rent is very low. So then our prices might be different too, of course. So we might have a cost logic that is pretty large, a whole store. We might have a whole subsidiary, right? That is kind of more conceptual. Okay, so this is one of those wheels, if you want, one of those topics that you need to understand. So direct cost versus indirect cost. This is mainly related to classification of manufacturing cost. And we said a lot of our class here will be kind of related to manufacturing cost. We will talk a lot about direct materials, direct labor, and manufacturing overhead. Okay. So what are the direct costs? Direct costs are those that we can trace directly. So that should be easy, right? If you're making a pair of shoes, what is it that you have to you can definitely trace directly to this pair of shoes? Well, you cannot make them without leather, right, or some other material. So you know exactly that if you make a pair of shoes, you will use this much of this material. So that's common sense. So nothing else. A pair of laces. Well, if you use 100 pairs of laces this month, how many pairs of shoes did you make? Well, 100, of course, right? Unless maybe something happened with one pair of laces or something. But in general, so you can trace it directly to the product, service, product, whatever it is. In this class, direct materials and direct labor will most of the time, especially materials, but labor too. If labor is given, let's say per hour, then we will consider it as direct labor, right? Unless we have something like wages or monthly wages. Well, that will probably be something that is fixed that we will kind of spread over the whole month, regardless of how many units of product we produce, right? So if we pay somebody $2,000 this month, regardless if they're just doing nothing because there's no business, or if they're working like full blast all month, well, that's kind of a fixed cost to us. So that will not be direct cost necessarily to each unit of that product, right? But most of the time, this class, and this will be very clear, very you will see it in problems and different examples. You will see when it says, well, this product requires 2 hours of labor, and then it says, you pay direct labor this much per hour. Well, then this is directly related to your product, right? So this is direct labor, for example, versus something that is fixed, that is kind of not changing, which is kind of I'm crossing here already into variable and fixed things, because direct costs are more often than not or always kind of variable because they vary with the number of units, right? I'm getting a little bit ahead here, but that's not necessarily what direct costs mean. Direct costs means that you can just trace them directly to the product, right? You can trace them directly to the product easily, and it makes sense to trace them because the cost justifies this, right? So you will not trace something that is very, very minuscule in cost in terms of the product to the product because it will just be too costly to trace it. In that case, that cost will go into indirect cost bucket, right? So we have these 2 buckets here, direct cost and indirect cost. So you would say if I can trace this easily and it makes sense, I will label it as direct cost. If not, I will label it as indirect cost. Right? So in indirect cost, we will have, for example, something that we call manufacturing overhead. Manufacturing overhead, like rent utilities, we will work with overhead a lot. You might get sick of overhead, but you will then know what overhead is. And everybody talks about overhead in business. You will hear overhead all the time. My overhead is high. My overhead is disordered. Right? Because more often than not, again, to connect it to another bucket, more often than not, this overhead is fixed. Right? So this overhead is fixed. Like your rent is fixed. It doesn't matter how many units you produce. Overhead is cost of doing business, starting business. Right? So if you want to have a restaurant, you need space. To have space, you need to pay the rent. Now, you pay this rent, monthly rent, the first month of your business when nobody's coming in because they don't know your business yet. You just start advertising and things. So nobody walks in. Maybe one person walks in the whole day, but you still have to pay that rent, right? So that will be kind of a fixed cost again in a different cost classification. But the bottom line is that's overhead, right? Overhead is because it's not related necessarily to your activity, to your direct production. How many customers you will have, how many units you will produce. And then you have a bunch of other costs similar to this that are large costs, like somebody's salary or something that is not directly related again to units. Or you have a lot of smaller costs. Like for example, you're making, again, let's use those shoes as an example. You're making those shoes, and then you use some glue, right? A little bit of glue to glue something on those shoes. Well, maybe if robots are making those shoes, machines, then they probably measure. You can probably measure exactly how much glue goes into those shoes. So you can account this into direct cost. But let's say you're making handmade, shoes. Well, how much glue you put there? Like what? Less than 1 cent? Like less than 10% of 1 cent? So it's really kind of not significant cost, and it's hard for you to trace this. Like maybe a little bit, one shoe is a little bit more, a little bit less. So you just put it all into boom, one bucket. How much glue or some nails or something, whatever, am I going to spend this month? $100 worth of glue. But you just put $100, $200 into overhead. We'll see later on why this is important. Chapter 2. So you put those indirect costs, like overhead, for example, just into one bucket and say, well, I'm going to just say for the whole month this was $100, and I'm going to spread this over then all of my products, right? Okay, so we kind of discussed this already slide. So direct materials are usually raw materials that become an integral part of the product. Be careful, these raw materials can be direct materials, but they can also be indirect materials, right? Like raw materials are everything that we use to make something, but they can be classified as direct materials, but they can also be classified as indirect depending on how much of it we use, or if it's direct or indirect, if it's important or not. Okay, Muhammad raised his hand. Go ahead, Muhammad.
Professor, for manufacturing costs, like let's say you have a factory and the machinery uses electricity, and the electricity, would that be considered a direct cost because you need the electricity to run the machinery?
You'd be indirect.
Excellent. Very good question. So, for example, electricity would most likely go into our overhead costs, like indirect costs, right?
Yeah,
Because
I understand for like most places that might be true, but it's like the, for example, for a data center, right? Data center, if I'm running a data center, my main cost and the cost that I can trace to how much I've been running the data center for will be directly related to my electric bill.
Well, it's not just data center, but I mean, if you're running some kind of manufacturing plant or whatever, you know, depending on how many products you will use, produce, you might, you know, let's say you have 10 machines, right? And this month you will produce a certain amount of products, and you can use just 5 machines to produce those products. Well, next month you're producing many more, so you have to use 10 machines. Of course, your electric bill will go up, right? So it would be related kind of to your activity. But the question here is not necessarily if in this classification, this specific classification, direct or indirect, is will this cost go up or not, right? Because we'll see in a second when we talk about variable and fixed cost, and then we have some mixed cost. So that can be, for example, a mixed cost. A certain portion of your electric bill will be fixed no matter what, like for air conditioning and lights and things. You have to have it 24/7 or whatever hours you're working, and that will always be the same. But then depending on your activity, depending on your volume you want or production, the rest of the bill might go up or down, right? So it might be different. So that will be, we'll get to this in a moment. So that's kind of a mixed cost, right? But in terms of direct or indirect cost, what is important is, can you trace this bill? Can you trace this bill directly to each unit of your product? That's kind of more important here than will the bill necessarily change, right? So if you make 100 pairs of shoes or 500 pairs of shoes, maybe your electric bill will go a little bit up because you use additional machine to make those 400 shoes. So clearly your bill will go up. But the point is it important for you? Well, of course it's always important, but is it kind of also easy for you, and is it relevant for you to trace each cent of that electric bill to each one of those pairs of shoes? Most likely not. Most likely not. So that's the point. It's not the main kind of part of this product, right? It's not the main cost of this product. So I would kind of say it's not a general rule, but too easy just to kind of for you to you and everybody else to kind of easy accept this or understand. Just, you know, if you think about, as I said again, going back to shoes, what are the main things that make them? You know, well, some leather or some fabric, some laces, some rubber. That's kind of the main component of your cost, right? Now you have some electricity that you spend on some machine, but there's a lot of empty movement on those machines too. So you see, it's kind of, I mean, what do you say now? Well, I'm going to put another 3 cents to these shoes. Is this important or not? It's really not. But that's kind of between direct and indirect. So it's simpler than, this was a very good question, but also related to, again, what we'll get in a second too, but not necessarily direct or indirect. For direct and indirect classification, the most important thing is to remember is, can I trace this directly to this thing easily? Like, is this really kind of, and mainly we will deal here with direct materials and direct labor, right? So that's kind of straightforward, direct materials, direct labor. Those are direct costs. And then everything else, pretty much, there is no direct materials and direct labor, is indirect cost, indirect labor, right? So we'll put those other costs all into manufacturing overhead, all into manufacturing overhead. Mohammed, does this help or? Okay. So manufacturing overhead, all manufacturing costs, okay. And then manufacturing costs cannot be easily traced, which is indirect materials, indirect labor, and other manufacturing. And you can go through these different examples here in narrative lecture and also in your slides. But so let's look at some examples on the next slide. So the bottom line is, in this classification, you're saying I have direct cost on one side and indirect cost on one side. What are direct costs? Kind of too easy to remember. Well, you can say direct cost are direct labor and direct materials, and then everything else is indirect cost, indirect materials, indirect labor, and other manufacturing overhead. And then we have something else, which is non-manufacturing cost, which we'll get in a second too, when we talk about this period cost and product cost, right? So these are completely separate from these direct costs and indirect costs, which we are talking about when we talk about product cost. So this concept is very related to the next one, which is product versus non-product cost. And these would be non-product costs, non-manufacturing costs, like marketing and selling and administration. So when somebody asked at the beginning of our class about the homework problem, then you have to kind of be careful. And what is the question asking? What is the question that's the key? That's very important, because depending on what the question is asking you, you will be looking at these things with those eyes, right? So these different key classifications, different buckets, will depend in a large part on what if I ask you, okay, there are 300 students now in this meeting here, or 265 now. Let's divide these students on the basis of height, right? So, and then we make some cut-off point somewhere and then say, well, students above this height go on one side, and students below this height go to the other side. Well, okay, so now we divided this group into based on height. Then let's divide this group based on weight. Well, now, I mean, generally, kind of higher people will probably be heavier because they're higher, right? But not necessarily. So now we are looking at the same group, at the same, like here, same cost or homework, same numbers, but we are looking at it from a different now perspective. Now we want to know, well, how do we divide this group based on weight? So people who are above this weight go on this side, people who are below this weight go on the other side. So you have to be careful when you're looking at basically you're starting always with the question, and you're starting with the question saying, well, what is the question asking me to do here? Because the question might not care at all about non-manufacturing costs. The question is just asking you about product costs. But basically then you're ignoring all of this here, non-manufacturing costs, because you're not asked about those costs, right? On the other hand, the question might be asking you to separate product from period cost, and then give both, right? Both amounts. So, for example, let's just quickly here, but this is in narrative lectures as well. So depreciation of factory building. Well, depreciation is a good item because first of all, it's fixed, right? But again, for this classification specifically, is it direct cost? Is it indirect cost? Can you trace some depreciation? You have a depreciation on a machine. Can you trace it directly to some pair of something, or a computer that you produce, or a car tire, or something that you produce? Can you trace this directly?
No.
to the product? It's hard to do, right? So and you don't necessarily care about tracing this.
No, sir.
Yes.
What if the machinery has a limited number of for example they set it on the machine, they say this can produce a million copies before it's rendered useless.
So you're saying you want to depreciate exactly this machine to 1 million copies, right?
Yes.
You could, in theory, you could do this, but maybe who knows? Maybe you're making different products on this same machine, right? You could do that. You could say, okay, I'm gonna depreciate this machine, but this is not how depreciation works, right? So depreciation, you're depreciating monthly amount each. You're depreciating monthly amount each month. You're not depreciating your depreciation, your machine. You're not depreciating on a unit basis, right? You're saying, well, I purchased this machine for 100,000, and this machine will last me 10 years or 1 million units, like you say, and then I'm going to depreciate it. Well, 10 years, $100,000, $10,000 per year, so that's like what, like $900 per month or something like that. So a little bit less. So you would depreciate this way, not because you might produce more units in 1 month and then less units in another month. So the machine is depreciated basically on a monthly basis, right? So that would be again kind of an indirect cost, not directly related to. Although I understand what you mean by a specific amount of units that I can produce on a machine, but maybe you will not produce 1 million units. So same thing on office equipment. But you see, the point here is the more important point here than this what the person just asked, direct or indirect. Yeah, is that what type of cost this is, because this will be important for you to put it into the right bucket, right, into the right cost. For example, depreciation, it's the same depreciation on office equipment. It's depreciation, like depreciation on factory building. It's just depreciation on office equipment. But it will not go into manufacturing overhead. Why? Because it's not related to the product, right? It's related to administration, selling and administration. It's related to non-manufacturing cost. So for example, cost for depreciation of office equipment would not be included in manufacturing overhead. If you put it there, your calculation will be wrong then in the end, because you might have to spread this manufacturing overhead cost over all of your products and find a unit product cost, which we will get to. So it gets a little bit, it gets a little bit more complicated than this. These are the basics, right? These are the fundamentals. So get the fundamentals, get the bigger picture now. Don't worry too much about detail at this point in this chapter 1. We will get to detailed chapters 2 and further. Property tax, same thing on finished goods warehouse, but then you might have property tax on a factory. Well, what's the difference? Well, property tax on factory will go into manufacturing overhead, right? But property tax on finished goods warehouse will go into selling because we already made a product. Okay. So go to this slide in your narrated lectures. Okay, so this is a second classification. This is a second classification that is very related to what we just did, this manufacturing classification, direct and indirect cost. So this classification is something that you learn in financial accounting for preparing financial statements. So this classification will separate cost into product cost and period cost. Again, if you're getting now already kind of worried, or I don't want to say confused or something, but you say, how am I going to remember all of this and so many different classifications and 2 more actually? How am I going to remember all of this? Well, you will again understand it. You will not try to memorize it as a kind of a definition, right? But you will understand it. Oh, okay, and then you will go to problems, to your homework, to exercises, and you will grasp the idea, and you will say, oh, I get it now. I get it now what he means by direct and indirect and product versus period and a later variable and fixed, right? So I get it here. So some things are kind of parallel. Like I said, direct materials will likely be variable. Why? Because you're tracing them directly to your product, right? Piece of leather, piece of rubber or something, piece of plastic, 4 nails into this chair or something like that. Those are direct costs, but they're also variable costs. Why? Because if you produce 1 chair, you will use 4 nails. If you produce 2 chairs, you will use 8 nails then, right? So that's kind of variable, right? So when IKEA sends you their package that you purchased for something that you have to assemble on your own, they know exactly what was in that package. You agree? They know exactly what's in the package. They know that it consisted of, if you ordered a table, right? They know it consists of some top, and then some legs, and then some screws. How many screws? Exactly the number of screws, and then little thing that you screw it with, and then it consisted also of that whole a box, cartons. That's all cost, right? So this is direct cost, right? Direct cost, but it's also variable, which we'll get to in a moment. It's also variable. Why? Well, it's variable because if they don't make this thing, they will not have those costs, correct? So think in those terms. Now, for this classification here, okay, somebody raised their hand. Go ahead.
Where do indirect costs go in these classifications?
Say it again.
Where do indirect costs go in these classifications?
Indirect in which classification?
When we're dividing product cost and period cost, because I only see direct.
Excellent question. Okay, thank you. That's Ellie, right?
Yes.
Okay, very good. So we are now in product and period cost classification. Okay, so if you look at this now here, it says, what does it say here? Product cost. Well, the word tells you already product cost. Costs that are related to the product, and they will include direct materials, which we now understand. They will include direct labor, which we now understand, and they will include what? Manufacturing overhead, indirect cost. Now, I will mention this in one of the narrated lectures. I think maybe in chapter 4 or something, because it's not really relevant to us here for this class. There is indirect cost or overhead if you want in sales and administration too, but we don't care about this for this class, right? We don't care about it. So when we talk about overhead in this class, we mainly talk about manufacturing overhead. So indirect costs are, if you want here, all of them are in product cost. All of them are in product cost. So indirect labor, indirect materials, and other indirect costs that you could find on previous slide, they are all in product cost, right? So when we make a product, we will use those costs to make a product. Period cost, we will not talk about overhead or indirect costs in terms of period cost. Period cost we will just call, so they're kind of equivalent, you see, to selling and administration cost, right? So this classification here is almost identical, if you want, or similar to to the manufacturing classification that we just covered. Right? So if you look at this, you say classification for preparing financial statements, you can divide it into product cost, we also call it cost of goods sold, and then sales and admin cost. So it's very similar to this classification. Direct cost and indirect cost on one side, and then non-manufacturing cost or selling and administration on the other side. Okay. This piece here is not challenging, but it's kind of something that you have to maybe review a little bit. And this is the only part actually, and that will be relevant to chapters 2 and 3, where you will have to kind of remind yourself a little bit of financial account. Other than this, once we cover this, once we're done with this, you will really, I mean, of course, you will have to still know terminology and maybe here or there kind of use this classification, but maybe we will work with other things. So in that sense, class is also different than financial account. So you see here these accounts, right? Inventory accounts that are on balance sheet, and then it goes to cost of goods sold, income statement, and this will become much clearer later on. And then period costs are separate; they include sales and admin, and they are of course just expense on income statement. Ellie, does this answer the question?
Yes, thank you.
Okay, very good. Okay, so you can see here. Yes, Mohammed.
Professor, are you going to be posting the slides on Blackboard?
All of these slides on Blackboard already.
Okay.
They are in lectures.
So both in narrated lectures and in course documents. In course documents, you have slides, just plain slides in PDF version, and then in narrated lectures, you have narration of the slides. So you see here this division between product cost and period cost. You will see in a moment in an income statement how this looks like. They're also called inventory costs because they are assigned to inventory accounts, raw materials, work in process. Again, this will become much more important now in chapter 2 and 3. And then period costs are not related to the product. That's the main thing. They're not related to the product. You can call them, if it's easy for you to remember, you can call them non-product costs, non-product, right? But you know, we kind of call them period costs because they will be expensed in that period regardless of the activity. Now, if you say later, well, but these costs change because my sales commissions change. Very good. That would be a very good observation, but it will be related to is your cost variable or not? So again, different classification. Okay, so this, for example, balance sheet and income statement example. You will have to be very familiar for these couple of chapters 2 and 3, and maybe some later too. You will have to be very familiar with this basic formula here, right? You will have to understand this basic formula here. Beginning inventory plus purchases minus ending inventory is equal to cost of goods sold. So how much stuff did I sell?
Professor, I'm sorry.
Yes.
Is there any way, can you just repeat what you said about the period cost when it comes to sales commission again? I'm sorry.
I said, if you, well, you know what? I think I'm recording this, so go to the recording and then you will see.
No problem. Yeah, go ahead. You're right. Go ahead. Respond, Professor.
You know, I'm just trying to figure out how to handle this.
No, you're right. You're right. It's okay. You are recording this. So I'll just go back and then, listen to that again. You're correct. Go ahead.
Yeah, let me do it now because you asked it now, but in general, we will just move forward. So
Sure.
when I said, well, here you might say, these period costs, why are they called period, right? You might say, why are they called period if I see that my commission is related to the product actually, because my sales commission will depend on how many units my salespeople sold. So it's not related just to this month. It's related, but you might make a case, well, you will pay them this month, so it's period cost. But if you say, well, yes, but it's changing, so I don't understand why you're saying, it's period cost, because maybe, well, this is more related to the classification between variable and fixed, not product versus period. Because the same classification, the same cost, the sales commissions, you can classify them as period cost because they're in sales administration, but you can also classify them as variable cost. So again, you're looking at the same thing from two different perspectives, and they can be both, right? They can be both. If you say, how can they be both, then what am I going to do? Right? It will depend on what the question is asking. The question is asking, what are your variable costs? Then you care if they're variable, right? But if the question is asking you, give me a breakdown between product and period cost, then you don't care if the cost is variable or not. You care about if it's period or if it's product, if it's sales administration or if it's product cost, right? Was this Ora? Ora, did you
Yes,
ask?
Professor. Yeah, that was it. No, that was it.
Okay, good. Okay, I hope this helped. So you will have to really be familiar and know this equation, right? So go over this equation in narrated lectures again. It's a very straightforward thing, so there's nothing complicated here. Just think of it in simple terms. Beginning inventory. How much stuff did I have? Okay, so you're selling newspapers. Well, maybe not newspapers. You're selling something in your. I remember this when I was younger. People would close newspaper stand, small stand. They would close it, let's say for 1 day per month, maybe some Sunday or something. Because they open every day, right? But then once a month, and you would already know because probably they're closed because it's the end of the month. Let's say last Sunday or something like that. Then they would close the newsstand the whole day, and they would do what? They would do inventory, right? They would do inventory. And then they would count. They would count all of their stuff in the inventory. Why would they do this? Whatever they have in the store. Well, to find out how much they actually sold, and if their money for the month is actually equal to whatever happened within the newsstand. So, for example, they would look at their record and say, well, we had 100 packs of bubble gum, chew gum in our store at the beginning of the month on January 1st. We had 100 packs, and then we purchased 70 packs more, right? 70 more throughout the month of January. We purchased. So how many did we have actually throughout the month? We had 107, right? But now, at the end of the month, January 31st, they're doing the inventory. They had 30 packs of bubble gums in the inventory. So how many did they sell? Well, how many did they sell? They had a total of 170 throughout the month. And at the end of the month, they had 30, so they had to sell 140, right? So you need to be able to do this. Okay, so it's very simple. It's not like some crazy equation or something. It's kind of very common sense equation. Right? So how many did you sell? Well, 140. This is your cost, cost of goods sold. This is your cost. Well, I was talking about units here, right? But we can talk about dollars. We had $100 worth of inventory here. We purchased 70 more, so we had 170. At the end, we had 30. So we sold 140. Of course, our revenue was maybe 500 for these units, right? So that's it. So now we would, look at this difference and say, well, does this match each other, right? Does this match our number of units or number? Does it match? Because look, maybe somebody's taking money home, maybe somebody's taking bubble gums home, right? So you have to do the inventory. You have to know what happened throughout the month. Okay. So that's a basic equation that you need to be familiar with. Very important for chapters 2 and 3 again, to figure out the cost of goods sold. Okay, are we doing okay so far?
Yeah.
Yes. Yep.
Okay, great. I see things in the chat room, but I really don't have time to go to chat room. So you either have to raise your hand like Ellie did, or I think Mohammed, and or you have to kind of say something, or because I'm managing waiting room and of course slides. And so, okay, very important classification. Again, and don't get stuck on these classifications like they're kind of static, right? So now I have to memorize these classifications. What's he talking about? How do these definitions? No, just think of them as something flexible, something moving, and something that you will use when you're looking at the problems. And when you're reading the problem, then you're looking at what the problem is asking from you. So now the problem is asking from you, tell me what are the variable costs in these costs in this operation. What are the variable costs? Well, then that's your question. What are the variable costs? What are the fixed costs? What are the mixed costs? Like I think Mohammed said, electricity. It's likely a fixed cost. I mean mixed cost, because you have certain amount of electricity that you need to spend anyway, just for air conditioning, lights, and things. Just a basic operation, just to turn the lights on. But then, depending on how much stuff you do, maybe electricity bill will go up, right? So somebody was talking again about very kind of, it's a couple of questions were very kind of sophisticated in the sense of business. Like, I'm running a data center. This is not necessarily created for the type of topic, but they have their cost structure, of course, too. But now, okay, so now if we add 50 more servers, of course, Google has more electricity bill than you or I, right? Or Facebook or whoever is running gigantic, databases with a ton of servers, power. So of course, they have a large electric bills, and their electric bills probably changes depending on how much usage there is. Or Verizon, I'm sure, knows how much their bills are in terms of connectivity and their what's it called, capacity of their network, right? So that's why they used to charge. I don't know if it's the case anymore, but they used to charge certain. Well, they still probably you have certain. You have the different plans, right? So you want to use this many gigabytes per month, or you want to use more, you have to pay more because it costs them more, right? So that's a mixed cost, for example. So you're looking at the question first and you're saying, what are they asking from me? And then you're identifying things. And then you're thinking about these different classifications. You're saying, are they asking me about product or period cost? Are they asking me about variable fixed mixed cost? Are they asking me about manufacturing cost, direct, indirect, which is kind of similar to product versus period or sales and admin? Or are they asking me for something else, right? Okay, so variable costs are very straightforward, like we said. So I'm using his subway rides as an example. Again, this is a narrated lecture, so we don't spend too much time on this. But I mean, the more the costs that are variable will change in total, directly in proportion to your activity. So if you buy a network card that uses a single ride, well, depending on how many rides you make, that's how much you will spend, right? That's how much it will cost you. So that kind of makes sense intuitively. So same thing if you're producing something, a pair of shoes, you're producing 100 pairs or 1,000 pairs, you will not use the same amount of leather or fabric or whatever, or computers, you will not. If you're making 100 computers, you will use 100 screens, but if you make 1,000 computers, you will have to use 1,000 screens to make it, right? So that's a clearly variable cost. It varies. The important thing is that variable cost, so it will change in total, right? In total. But per unit, it will stay the same. So the computer screen costs you're paying it to a supplier $5 per computer screen, for the phone or for computer or whatever. So you pay $5 for that screen. If you will pay $5. Let's stick with this. You might say, well, if I buy more, I will pay less, but that's fine. But let's say you're getting the best price you can get. So you pay $5 per screen, no matter what, right? One screen, 100 screens, 1,000 screens, whatever. So each screen costs you $5. Screen for 100 phones, it's $500. $5 per screen, 5 times 100, 500. If you make another phone, that's one more screen, that's $5, right? So only the total will change, see, but per unit staying the same. So you have a lot of different examples of what is variable cost. Merchandising companies, it's units sold, manufacturing companies, materials, labor, overhead. Overhead can be variable, right? It can be variable, it can be fixed. Again, machine hours that are variable. Well, we use 2 machine hours per unit. Okay, 100 units times 2 machine hours, 200 hours. 300 units times 2 hours is 600 hours. So the total will change. Right? And then in different merchandising companies, you can have commission, shipping costs, variable costs, anything that is changing in total per unit, right? Anything. So you might think of it, yeah, this sounds like direct cost, directly related to the product. I can trace this directly, right? So this can also help. So that's variable, right? So anything that will change per unit in total, related directly to each unit, would be variable cost. Now the fixed cost is just the opposite. It's fixed. So your rent is fixed, or your metro card bill, if you buy monthly, it's fixed. If you take 5 rides or 100 rides, it doesn't matter. It's fixed. It's one amount, right? So your rent also fixed. It doesn't matter if you have 1 customer or 500 customers. It's fixed. Nothing changed. Now, so that's easy to understand. Now, be careful with another thing that is a little bit more difficult to understand, and especially when it comes to problems, which is that your fixed cost, and usually we don't look at fixed cost this way, but you will see problems immediately starting with chapter 1 that will give you some fixed cost per unit. So you would say, why they give me this per unit if it's fixed? Well, they're giving it to you so that you would understand, to see if you understand the concept or not. So the cost is fixed, right? The cost is fixed in total, but it will vary per unit. Why? But think about it. If your monthly rent is $1,000, and you make 10 computers this month, or 10 phones, or whatever you're making, how much did this cost you per phone? Well, 1,000 divided by 10, it costs you what? $100 per phone. Okay. Now, if these same $1,000 in rent or depreciation or wages for somebody, for a supervisor or a person running the machine or whatever, and if you make 1,000 phones or computers or shoes or whatever you're making, how much does this cost them per phone? Well, $1 per phone. Okay, big difference, right? So the point is, anybody, what's the point then with fixed cost? This is kind of not advanced, but So what's the important thing about fixed cost?
And doesn't change.
How much is my cost?
Okay, in total, very good. Okay, in total, it will not change. It doesn't matter if you produce 10 phones or 1,000 phones. Your cost will always stay the same. That's a very important point, right? Because sometimes.
Hence why it's called fixed cost.
Sorry?
Hence why it's called fixed cost.
Yes, thank you, Shannon. But if I tell you that your fixed cost is $1 per unit, $1 per unit, you immediately have to be very careful and say at what level of activity. Now with variable cost, it's kind of easy because if I tell you, well, your cost per unit is $1 for variable cost, you just say, well, okay, so how many units, right? 100 units, well, that's $100. 1,000 units, $1,000, blah, blah, blah. Okay, so things will change in total, but $1 will stay the same. But if I say your cost is $1 per unit, your fixed cost is $1 per unit, then you immediately have to be careful and ask yourself at what level of activity. If the level of activity is 1,000, that means $1 times 1,000, my cost is $1,000, total cost. And now if I say, well, but now your level of activity is 10, you will not say 1 times 10, like here, for variable cost, that will be $10, because your fixed cost will not change. It will not go to 10. It will still stay 1,000. What will change? What will change is the cost per unit. Now suddenly the cost per unit went way up to $100 per unit. Do you like this? Do you like this?
No.
Anybody? Do you like this?
No,
Why not? Batu?
because the cost is too high.
Very good, very good. Because suddenly your product is very expensive, right? Before your product cost just enough to fixed cost, before there are other costs too. But now your product is suddenly, instead of just $1 per unit, now your product costs you $100 per unit. You can see this very easily. You know, whatever. If you have to, I don't know, if you do any kind of business, you say, well, okay, you do a street fair. Very simple example. You do a street fair. We actually might have this example later on, but you do a street fair and you have to pay, let's say, $100 for your permit or something. And you sell just one t-shirt, Well, okay, so you make some profit on this t-shirt, but these $100 fixed cost, you sold just one t-shirt. How much did this whole business enterprise cost you? Well, it cost you $100 for each t-shirt, right? So now you sold t-shirt for $10, well, let's say for 20, but it actually cost you also in there, the t-shirt alone cost you $10. So now you made $20 here for t-shirt, the t-shirt cost you $10. So you made kind of $10 profit on the t-shirt. Yes, you make $10 profit on the t-shirt, but you also spend $100 for this permit, right? So you lost money, right? But if you pay $100 for this permit and you sell 1,000 t-shirts, this permit costs you how much? 10 cents per t-shirt, right? 10 cents per t-shirt. Now these $10 look much better here. $10 minus these 10 cents per t-shirt, you made $9.90 per t-shirt, right? So now you're happy, right? With this street fair, $9.90, and you sold 1,000 t-shirts. Very nice job, right? You made like close to $9,900 in one day. Wonderful, beautiful business. So what's the point again? So yes, the important point is that fixed cost will not change. So what's another important point about fixed cost? Anybody from what we just discussed?
The fixed cost per unit. The fixed cost.
Show you how profitable you are.
Okay, the important point is that you will always try to maximize your fixed cost, right? You will try to get as much activity and volume as you can. If you have to pay the rent for your restaurant, how many customers do you want? 5 or full every day? You want to be full every day. If you're making phones, if you make some, of course, you know, I mean, if you cannot sell them, then you're not going to produce them, those phones or whatever. So it's not just like easy to say, well, I have all these machines and all this stuff. I have to produce now a million phones just to cover this stuff. Well, if nobody wants to buy them, then you will just incur more cost and you will not cover those fixed costs. So you will kind of get the double loss, right? From variable cost plus. But the bottom line is, if you can, you want to maximize your fixed cost, not maximize the cost, but maximize your production in those fixed costs. Okay, Soraya, go ahead, Soraya. Soraya, go ahead. You raise your hand. No? Okay, Mohammed, you raise your hand too, I think. Go ahead.
No, that was before. You
okay. Okay, so you need to go. You need to definitely understand. This is just a summary of this thing. Just a summary of what you said. This is even further summary of summary. So you need to understand this behavior very, very well. Very important. These are the mixed costs. I talked about this already. So a certain portion of the cost is fixed, like let's say electric bill or something. But then the more activity goes up, the more cost you will have. So for example, you might have salaries, right? Like a lot of you actually work, and then you get paid certain amount here, fixed cost, but then you also get some commission, right? So your employer has to pay you this fixed cost here, no matter what. Even if you sell nothing this month, well, they might fire you then after a while if you sell nothing month after month. But they will pay you fixed cost here, so that's a fixed portion. But then if you sell stuff, then your commission will go up, right? I mean, your commission will just stay whatever it is, depending on how much you sell. But kind of the cost to the employer, if you want, will go up. This variable portion will go up. And of course, they're happy with this because you're selling stuff. But the bottom line, the total cost here, total cost will consist of this variable portion of this, let's say, this commission plus fixed portion of your, let's say, monthly salary. Right? Okay, I think we're doing fine. This is a mixed cost kind of equation line. You don't need to remember it in this way. Y is equal A plus BX. You simply understand what this A stands for, B what stands for, and say you remember that Y is total cost. So you can always work with basic, say total cost is equal, that's Y, is what equal to my fixed cost plus my variable cost per unit times number of units, right? Number of units. Right, so that's basically the equation. Number of units or whatever the daily activity is, right? Commission dollars or something like that. So okay, so I will let you go through this example in narrative lectures, so you have some incentive, get some incentive to go through this in narrative lectures. But the bottom line here is, okay, so we are looking again in common sense terms. this equation, total cost, fixed cost plus variable cost per unit. So we're saying, what is my fixed cost? Well, this is monthly rent, 2,000. Then how many t-shirts am I going to sell? This is kind of a planning, right? We will see this in budget. So this is the budget. So, well, I'm going to sell 1,000 shirts. And each shirt will cost me $2. Remember, this is a cost we are talking about, not revenue. So $2 times 1,000 is 2,000. So 2,000 here and 2,000 here is 4,000. So now if we change this number here to 500, what would happen? Well, 2,000 will stay the same, right? That's a fixed cost. But then 1,000 here will become 500. So we'll say 2 times 500 is 1,000. So this would become 3,000, right? 2,000 plus 1,000, 3,000. But
what if you change the cost per shirt?
I'm sorry?
What if you change the cost per shirt?
Yes, very good, very good. Yeah, it might change. So we will see this in chapter 6. The cost per shirt might change. The cost per shirt might be 150 because we are now given a different scenario, and that will be one of the questions, right? So we will see the change happens. We will say in chapter 6, when we start dealing specifically with this topic, we will say, okay, the rent stayed the same, 2,000, but our cost per shirt dropped down to 150, which is great, or maybe went up to 250. And the number of shirts changed to 1,300. So now you have to change numbers, right? So you say 2,000 in fixed cost plus, let's say 150 per t-shirt times 1,500 shirts. Well, then this number 4,000 will be different, right? Even fixed cost might change because we are given instructions. The rent might stay the same 2,000, but then it might say you also have additional insurance, $500. So now even your fixed cost changed. So very good, very good. Yeah, we will work on this in chapter 6. This is again this chapter. Yes.
I mean, I understand that, but in the lesson it said that if you have, for example, for $10 per shirt, how many to break even? And
that's narrated. You're talking about narrated lecture?
Correct.
Yeah, very good. Well, that's why I said everybody should go to narrated lecture. I was a little bit ahead over there, kind of. That was, but that's why I want everyone to look at the lecture too, because I don't want to do the same thing here, and it's pointless. I don't want to repeat the same thing, and I want everyone to look at narrated lectures. But well, break even, that's a kind of already topic in chapter 6. So I was kind of just testing you. That's not part of the basic here, chapter 1. I was not testing you, but giving you a taste of what is coming, right, and what you need to understand. So yeah, break even will change. Break even will change depending on when price changes and fixed cost change, right, and your cost change. So break even depends on a couple of different things. It depends how much you're charging for the t-shirt. For example, here we don't have any amount that says how much we're charging.
It's like $10 in your narrated lecture.
Yes, correct. In narrated lecture, $10.
So break even will be $250.
I'm sorry.
You have to sell 250 t-shirts to break even.
Okay, Andrew. So now you told everyone what the answer is. I think it's 250. Even without looking at that, but they should look at the lecture still. So but I'm glad you went through the lecture. So yes. So for example, if the price, if the cost, as everybody's saying, if the cost of this t-shirt is not $2 anymore, but $250. But our price stayed 10, then that break-even point would change. It would not be 250 anymore. It would be something else. But again, that's chapter 6. Because I wanted you to see in that example, in narrative lectures, I wanted you to see how things relate a little bit to each other, right? Okay, this is very important part of this variable fixed thing, and in general, part of this traditional versus contribution format. Talia, okay, go ahead, Talia.
Hi, Professor. Wondering for mixed costs, if you have when you have an example of that for the contribution format, would you separate that the variable cost of like $2 on the contribution format and then separate it with the, let's say, $1,000 that's the fixed expense on the contribution?
Yes, absolutely. Yes, very good. Yes. So your this is exactly where we are right now. So your $1,000 or $2,000 from previous example, your $2,000 from previous example rent from previous slide would be here in fixed expenses, right? But those $2 per t-shirt would be here, right? So yes, the mixed cost, very good point. The mixed cost would be split into variable and fixed, and it would be two different places, right? Two different places. Now, for the traditional format, everything might be here, depending on what type of cost it is. If it's related to manufacturing, to product, then it will be here in cost of goods sold. If it's related to sales and administration, then all of it will be here. Which brings me to this slide, and I explained this in narrative. Maybe I should leave this. Everybody should look at narrative lectures too for this slide because. Okay, let me try quickly. You see how the example that I gave before. You can look at our class in two different ways, right? So this is the same company. It has the same sales as you can see here, and same net operating income. So this is the same corporation. We are just looking at this corporation through two different set of eyes, or two different ways. In this way, we are looking at classification in product cost and period cost, or product versus sales and administration. But in this case, we're looking at those same costs, and look, they add up to the same thing: 90,000 here, 90,000 here, and 90,000 here, 60 plus that, right? So these are same costs also. They're identical, 90,000. It's just that how do we classify them differs from these two formats. In this format, we're classifying them based on are they product and are they selling and administration. And in this example here, we are looking at them as if they are variable or fixed, right? So as you can see, some of this will be in different places. And usually, for example, well, we gave a couple examples already, but for example, selling and administration. Where will we have here? Let's say rent, and then we have sales commissions. So where would rent go? Would rent go to variable or fixed? Well, it would go to fixed, right? But sales commissions, where will sales commissions go? They will go to variable because sales commissions will change depending on how much stuff we sell, right? Or okay, electric bill for administrative building. Maybe a portion is fixed and then another portion is variable. So that will go. That's not a perfect example, electric bill, but anyway, the other portion that would increase maybe with activity or something would go to variable, right? And then of course for manufacturing, let's say direct materials would of course be variable because it will depend how much stuff we make. Direct labor, if we think of it as just being direct per hour per unit, then it would also be variable. It would change just depending on how many units we make. But for example, manufacturing overhead might be both in variable and might be in fixed, right? We said, for example, manufacturing overhead, some indirect small costs like glue or some nails or something, well, they will change maybe per unit. So we might put it into variable, right? But others, like that are completely fixed, let's say rent on a manufacturing building or something, will be in fixed expense. So again, same numbers, just look at in two different ways. Okay, two people raise their hand and see who they are. Go ahead.
Hi, I'm John. Professor, a quick question. So you say in the contribution format, we don't have the accounts here, but for example, we have direct material, and if we have direct labor, that will be in variable expenses. Under variable expenses, that will be there.
Correct. It will be variable expenses because the variable cost will vary directly with the units of activity, and those direct costs, let's say direct materials, direct labor, they will be directly related to those units. So as I said, if you make one phone, it costs you $5, but if you make 100 phones, it costs you $500. So clearly it changes. So it will be variable expenses, right?
Okay, thank you. That's it.
Yeah.
So my question is that why are there like two different formats? Why doesn't the management use like just one format?
Okay, very good. Well, that is partially answered in the slide that we skipped, slide 1. It's in narrative lectures again, and it's in your textbook also. And look, as I said when we started, financial accounting is concerned with financial statements. It's used often, as it says here on this slide, primarily for external reporting, especially if it's a large organization, right? And then you see here it says that contribution format is used primarily by management, meaning you don't report this information to anybody outside. This is for you as a manager to more effectively manage your operations. Okay, what do we mean by this? Let's go to the next slide. So you have this same contribution format just broken down into per unit here, right? Very important concept, this contribution format per unit, very important concept. So the contribution margin format emphasizes cost behavior. We know this already, variable versus fixed. By separating cost and variable, the contribution format covers fixed cost and provides for contribution margin, covers fixed cost and then provides further for the income. So if you are a manager, you want to know, for example, and we talk about this again, the textbook talks about this, and I talk about this, the difference between financial and managerial accounting, that sometimes you're not concerned necessarily with your financial statement. You just want to make a decision, right? This class is also, as I said, kind of strategic thing or decision-making class in terms of accounting and finance, decision-making. Not fancy finance like you study when you study in your finance classes, but operational finance, operations, meaning cost, how much did this cost me, how much are we going to charge for this, and so you want to make the right decision as quickly as possible, for example. You're not concerned necessarily, of course you want to be precise, but you're not concerned necessarily with the cost of reporting or like with financial statement or traditional format. Here you want to know how much will my net operating income immediately, let's say, change if I sell 1 more unit or 100 more units. Is this profitable for me? Will my fixed cost change if I change this? If not, do I have empty capacity? That's why I said earlier, you want to use your fixed cost to the maximum possible. You can, right? The maximum extent possible. You want to use your machines effectively. You don't want to have a cost of 20 machines, but only 3 of them are working. Right? So contribution margin format helps you make those decisions. What do I mean? Well, look at here. 100,000 minus 16 variable costs, which you can trace directly to each unit, both in terms of commissions, sales commissions, product costs like materials, labor, etc. overhead. Then you have contribution margin. Contribution margin pays for you, pays for your business, right? Now you have fixed costs about which you cannot do anything, and they're not related to your activity. They're just there, 30,000. But ideally, they should be related. You shouldn't have too much capacity, right? You shouldn't have 10 machines if you can make things on 3. But anyway, so now you have a profit of 10,000. How does this work per unit? Well, let me ask you quickly. If your sales are $50 per unit, if you're selling things $50 per unit, how many units did you sell? How many units did you sell?
2,000.
Who is saying this 2,000?
Me.
I don't see the name.
Joanna, chica.
Joanna, very good, Joanna. 2,000. How did you get 2,000? Well, you probably said, well, 100,000 is total cost. And I sold each unit for $50. So I divide 100,000 by 50. So I should get 2,000, right? So these are 2,000 units. Very good. 2,000 units times $50 will give me $100,000. So now, how many units are here? How many units are here?
The same.
Very good. Excellent. 2,000 units. Same 2,000. How many units are here?
2,000.
The same.
Same 2,000 units. Very good. So you see that these here behave all together. They are all kind of variable, right? They all change together. They're all based on number of units. So now if you sell 2,001 units, how much profit will you make?
$20 more.
How many?
$20 more.
Very good. Not 50. Very good. I don't see who's saying it, but not $50. Not, well, $30 is your cost of cost, but you will not make $50 profit. Because why? Because $50 you're selling it for, but you have cost of $30. Let me see this. Okay. Anyway, some warranties, cards, whatever. I mean, they call it all kinds of things. So how much will you make? Not $50, because $50 is your price, but you have some variable costs that include this one. So you will make a contribution margin of $20. You see how useful this is. So you know that this 1 unit here will immediately give you another $20 here. So that's very useful to you as a manager. So your profit will go up to $20. Now, so you can change this number to whatever you want. 2,100 units. 2,100 units. Well, it will simply be 100 times 20. $2,000, right? So contribution margin is very useful and very important. So go through this in narrative lectures, and we will work with contribution margin format a lot in chapter 6 and all other chapters later on. So this is very, very important concept. Very important concept. Okay, this is the final classification. I'll not spend too much time on this. You can go through this in our narrative lectures. This is classification that will become important only at the very end in chapter 11. So go through this on your own. Opportunity cost is important. always, there's no free lunch, as they say, no free lunch. What do I mean by this? Well, you being here now, listening to this, you could be doing something else. So it doesn't have to be necessarily financial. Of course, we talk about financial side here because it's accounting class, finance class, whatever. It's business topic, right? But there's no free lunch. You're always sacrificing something for something. So just being here, listening to this, you're sacrificing doing something else. You might be reading something, you might be having fun, you might be watching a movie, you might be doing whatever. Right? So go over this topic. Now, of course, here we'll talk about opportunity cost of financials. And again, this will become important only all the way in chapter. Well, we'll see, maybe chapter 6 too a little bit, but we'll have to go through examples about this. So go through this on your own. Sunk cost is cost that is just sunk. It's gone. Okay. So I give you a couple of different examples, and your book gives you I think some examples, and I say a few things about this in narrated lectures. Sunk cost is it's gone. There's nothing to change about this, and you're always concerned about the future, right? So sunk cost is something you cannot change, so it's basically irrelevant, right? So we'll talk about this also later at the very end in chapter 11, but go through this in narrated lectures. Let me just jump into a couple of problems we have. Maybe a lot of people have left, but a lot of you still here. So let me go to just a couple of examples that are covered also in narrated exercises, but briefly just to give you a taste of what's going on. So, for example, this is a very basic exercise that that you should definitely go over, and so that will help you understand a little bit the difference between what we said earlier between somebody asked was why we're using contribution format. So you will see how it helps you just to look at numbers in different ways. So we have traditional income statement and contribution format income statement, and I think this exercise might start in the textbook as a contribution first, but maybe I started as traditional because it's more interesting. But basically, in this exercise, you already have to start using your knowledge of that equation that I said, beginning inventory plus additions, purchases minus ending inventory. So here we have beginning 24, we are adding 180. So basically, you have to calculate your cost of goods sold here, 160. Give me just a second. Somebody's working outside.
Professor, can I ask you a quick question, a little bit related with this exercise? I think for me, it's a little hard, the vocabulary. Sometimes when they say like total or average, or for example, I have one that I'm stuck on it, like a manufacturing overhead per unit. When this account is, when you say manufacturing overhead per unit, that means there is variable manufacturing overhead and fixed manufacturing overhead, right?
Yeah, if we talk about total manufacturing overhead, right, per unit, then it means that everything is included in that manufacturing overhead, correct? Right. So I mean, you will be. I understand now. Where are you now? In chapter 1 homework or what? Or
yeah, I feel like I read twice actually the chapter 1 because my English is still no strong and I'm trying to understand and everything. But I am in the connect homework, so that's what it is more tricky because the language is still is like one thing is like I say manufacturing overhead per unit, and there is total manufacturing, but there is two accounts too at the same time. There is like a variable manufacturing overhead.
Oh, I see. So you know what? Well, first of all, there's nothing we can do about language, right? The language is language, and I'm sure it's hard for somebody who is who never studied maybe before English, although your English sounds to be perfectly fine. So it's not about that you don't know the language; it's more about learning new terminology in new language, right? So, what I feel you're saying, what I'm thinking, maybe you're referring to, and you can post your question on the discussion board. You should all use discussion board to post your questions. But sometimes you have to combine. So maybe part of the problem is that you have to combine the costs for overhead, the variable portion and the fixed portion, and then put them together into a total, and then find out what's now the cost per unit. You see what I'm saying?
Definitely, yeah. I think that's kind of trying to navigate with it, but I sense that it is more the vocabulary because it's new. Like you say, I feel like I completely agree with you. It's new vocabulary, and we still, it's new knowledge, so it's a little hard to get it.
Yeah, just stay persistent with it and stay patient. And it's the way it looks. It's the same thing if I go and try to learn all of this stuff in Spanish or some other language that is not my language. So I mean, English is not my native language either, but any kind of different language that I'm not familiar with now that I don't know. So it will be very difficult, right? So there's nothing we can do about this part. So you just have to go through this. But be patient and just continue working with this, and you will get used to a different terminology when you start. Look, this is just chapter 1, right? We're on chapter 1, so don't get too now kind of anxious or impatient and say, well, I don't understand this, so this is too hard, or just get the basics idea first, and then you will start going into chapter 2 and chapter 3. But of course, the midterm is already like in the middle of October, so I sympathize and I understand it's hard. So I'm not, but that's the best I can say. But if you have any problems, like specifically, I don't understand what does this mean? I'm not sure what they mean, but just post those questions on the discussion board and we'll see. Because some people might say it's not even about language. Some people say, what is cost of goods sold? What do you mean by overhead? What is this? I don't understand this concept of overhead, which means they have to just go back and study, right? Read the textbook. And so I would say, in your case specifically, don't get too kind of worried about your language ability. Your language is perfectly fine. Just work on the material and work on problems, and it will be fine. So you see here that you already have to work with that simple equation, right, to find out your cost of goods sold. And you see here that these S&A costs are separate. And you see that you might have to figure them out by multiplying things per unit, things like that, right? Things per unit to get. You see, it says variable, but you ask for traditional. So what? You ask for traditional. That's the key. So what goes into traditional? Well, you're looking for sales and administration. Is this sales and administration? Yes. $2 times 20,000. $4 times 20,000. So that's 80,000. This is 40,000. So that's 120 here, right? 120. Plus we have some fixed here admin, fixed selling. So that's what 7. So that's total of 19. So that's how we approach this. Okay, so you will look at this more in narrative lectures. So let's go to the next example. So this is a very basic example. So this is a This is the variable one. Again, you have to be very proficient with the contribution margin format, and we will go over this over and over again. So again, and then compare these. Compare the contribution and tradition and see how did I get these numbers? What is similar? What is different? You have to be comfortable with both. They're actually compared here on this slide, so it makes it a little bit easier. Okay, I will skip this slide. I mean this problem right now. So go through this problem. We are already running almost 2 hours. Go through this problem in narrated lectures. This is a very good problem to practice that equation. We might get back to this because this is kind of already. I'm not sure why it's in chapter 1, but this is kind of more in chapter 2 thing. But it's an introduction probably. That's why. So, but this is a good kind of problem to think about and to see if you understand what's going on and things. To understand the wording, see of the problem, what they're asking you from it. Many times the problem with problems is that they're actually hard to understand. What are they asking from me here? Not calculations necessarily, but to identify what are they asking from me here. Well, now it's easy when I explain everything step by step, then it looks easy, right? But if I give you this problem alone like this, then what do I do now? So it's much more difficult, and that's what often students say. Everything is clear in class, right? Everything is clear in class. But then when I get the problem, I say, well, that means probably you did not spend enough time, or you did not actually understand, because I'm kind of leading you to step by step to everything, so it kind of looks easy. Nothing is difficult in this class. The topics are not difficult. Okay, so number 1, this is all very simple stuff. It's just it's a lot of it, as I say in my syllabus. So you can read the syllabus also. Again, why this class is sometimes challenging. So go through this problem on your own, and then we might get back to this problem. And this is a similar thing to the first one. Just different numbers, different C. Some things are missing. How do I find these things? How do I figure them out? Well, think about it. Oh, this is the one where I started with traditional, but they asked about contribution first. But I started with traditional because it's more interesting, right? So how do I find these question marks? Do I actually need them? Or I don't need them at all? Because I'm not asked for example, for these things. Or I can just dump them into something or find them in a different way. So go to this problem on to narrated exercise. Okay, I think we managed this well. Almost 2 hours. I hope the recording went fine, and I will try to post this. Any questions?
Professor, I have a question.
Yes.
When will be the next?
Chanel?
Do you know when the next review is gonna be?
When what?
The next review, like the next Zoom that review.
Oh, the next review. I'll see. I'm thinking about. We'll see. I'm thinking about next Thursday because I think there's a time on Thursday when there's less students, less classes, no students, less classes scheduled. So I'm sorry if you hear this noise outside. Somebody's working, but
Will it be at,
so I might schedule it. Yeah, go ahead. Go ahead.
will it be at 11?
Yeah, I don't know. I have to see, but I will try to find the time when there's at least a number of classes scheduled. So
Okay.
as many people as possible can join.
Okay, thank you.
Okay, you're welcome. Okay.
Good afternoon, Professor. I have one question. I'm unable to hear the narrated slides. I don't know if it's a problem on my end. Just
Yeah,
want
it's probably a problem. It's probably a problem on your end. You need PowerPoint. You need PowerPoint number 1, and you need like a full version of PowerPoint, regular version of PowerPoint. So
yes, I do have it, but I don't know. I'll have to redo it later on today and see. Like,
yeah, try it again. Yeah, try it.
all right, thank you.